Welcome to Markets Now. I'm Michelle Rook with Scott Varilek of Kooima Varilek. Seeing a lot of red on the board this morning, with the exception of a few of the wheat contracts early on. And Scott, thanks for being with me. And it looks like everything is kind of risk off here, with the president saying they're going to put 50% tariffs on the European Union. At least that's the threat, right?
Yes, thanks for having me. And it's a little bit of the attitude. Here we go again. Wondering what this means. I mean, we were just celebrating deals, told to celebrate every trade deal we made, and had some trade deals with Europe. And now we're back to threatening some tariffs again. And it was maybe a little bit blindsided that we were kind of feeling like maybe some of these threats would start to die off as these deals happen. And it's kind of back into the market. And I think it's just a sour tone for all of agriculture as we see, okay, are we really getting towards the other end of some of these deals or not? So that uncertainty just kind of scares us a little bit. And yeah, we're just not done with some of this, tariff talk yet. And that's probably the attitude. You got a Friday going into a 3-day weekend. And if that's the news you're, starting to trade to start Friday, probably could easily slip some of these markets just with the uncertainty there.
No doubt. And of course, it's weighing on the stock market, spilling over into the cattle market. And like you said, you hope that you don't see any more pressure. But what do the technicals look like here? After last week, we talked about these big reversals. We've had a pretty good week. Are we negating some of that, do you think?
Yeah, so these reversals that we see in the cattle, I mean, we've been at record highs for a substantial amount of time. I mean, the old 2014 high was 172, and we're well above that. And along the ride, we've had lots of bumps and key reversals lower. And cash market has always been the thing to bail it out, the fundamental part of it. But we all respect that this market is high. So when you see these reversals lower, I mean, we break the feeders $12, $13 quick in 2 days. It happens fast. And we've got so much room between us. These long-term uptrend lines are well below us. There's a lot of room to break when this market does want to correct and still hold some of these technicals together. So short-term technicals, yep, that looks like correction could easily happen. Healthy bull markets do have corrections in them. We're just not quite used to this, much of a break. So we see that sharp drop really on not a lot of news. The scary part for me is, what if we actually had a major story that was negative, to force it lower, because there's a lot of chasing that happens. We're all very, like I said, respectful of how high this market is. We get it. Still can be friendly with some of the fundamentals, but we know we're high, and that eventually these prices, they're not going to last forever. So there's always that fear every time we break. For me, the technicals held together pretty decent. I mean, a couple of day break and then able to just kind of grind it back higher. I think that's a little bit of confirmation. Then you get a gap higher yesterday. That's impressive. There's still just a little bit of fire yet in some of this market yet.
No doubt. Like you said, as long as the long-term uptrend is intact, that is a good sign. Okay, cash trade this week has actually been a little bit better than we thought it was going to be. We're back up into record levels, even though we have light volume.
Yeah, cash market hasn't backed off. I mean, it's staying strong. And last week we saw during the break, packers really extending their arm, grabbing cattle, as many as they could for last week of May, first week of June, second week of June. And you're starting it, and that happens this time of year every year, because you have that big discount on June, and packers will use it to get inventory around them because they can buy against that discount. But haven't really seen these prices waver at all. Got $1 higher cash last week up to 229, and then we see some 230. This week we're up to a little bit of 231 as well. It's just a little bit lighter trade than it was a week ago. The regionals started with some of the 230 purchases, and seeing one major in there participating, getting a little 231. It's just on the lighter side. You can see some other packers throw out a low bid. We'll just throw out a 224 for the north, and that's where we're going to be. They're not going to get any cattle bought. It's just not going to happen. So it's been good. I think if you want to get your cattle sold, you can. So it's not like you're struggling to find the bid. It's just there. It's on a lighter trade. We're buying for a 3-day week and 4-day week next week, and some of them are going to make it a 3-day week. So lighter kills expected. But ultimately, I feel pretty good about it.
Do you think we'll see much cash trade here, though, considering we have a cattle on feed report coming out here this afternoon? And talk about that cattle on feed report and what we need to have in that report to not see this market sell off. How bullish does it have to be?
I think as far as the packers wanting cattle, are we going to see some more cash? I mean, they want them. We're in this peak demand season. Demand is awesome. So I think that they want cattle. I don't want to let them josh you to say, yeah, we're full. We don't need them. I mean, they'll take them, but I think they're just trying to gain that leverage back. And it's been, impossible for them to do it. So if they get an opportunity, they'll be back in buying some cattle. But it feels like since they bought so hard last week, they'll probably pull the reins in a little bit on how many they're going to try to go after. So maybe not as aggressive, but cattle on feed report, maybe they'll wait and see if that's going to bail them out. But we're looking at some, light placement numbers. I mean, that's the theme. That's why we're here. The numbers are tight. I think that's expected and should happen on this report. We should have some friendly numbers. The only thing I worry about, as high as we are, we know that this market can break fast, and we've got the CME, going to raise, make bigger daily limits yet, going to raise them $1. So when it is, topped, when the market is ready to roll over, it's going to be sharp. But we almost have to have these reports be friendly. I mean, if we had a really negative report slip in there all of a sudden, could be walking on eggshells. That really could be a catastrophic kind of trade to the market. So we're kind of at the point where we have to have bullish reports. They can't slip in to be too negative. I guess I'm in the attitude that these reports are going to be friendly. We should still be good. I think the tighter numbers are yet to come. We didn't see heifer retention last year. So those heifers were in the yard last year getting sold now. And if we're seeing heifer retention now here to start the year, that means tighter on feed numbers yet. It means that we're not there yet on the tightest numbers. However, the market is a futures market. If they do see that all these heifers are going out, getting bred, turned out on grass, it'll pencil that in early. The market will sniff that out, and we will break ahead of when we're supposed to. But as we look at it, tighter numbers are yet to come for me in the, towards the later end of this year.
Okay, well, we'll wait for that. Let's talk about the hog market. We're down a little bit here today. The futures feel like they got a little too premium to the cash index, and we're just waiting for cash to catch up here now.
Yeah, it seems like waiting has been the game. I think there's a strong attitude that this market should be able to move a little higher. I mean, you added a bunch on the open interest, so a lot of length there with that future optimism that we're going to be able to get this market going. It just feels like it's a market. It's ready to explode. It just needs something to light the fuse, and it just hasn't got it yet. At least the upper end of the range of cash has moved a little bit higher, so that, with where the cutout is and where that cash is trying to get, index is moving up slow. It's just a little bit, a slower pace, I guess, than what the market is ready for. So we kind of sit here spinning and waiting. I do see that we've got a lot of these hogs cleaned up. We had some weight issues, excellent weather conditions, and some surprising gains on some of these hogs. So I think we've gotten through them. Now we can see those weights are starting to come down just a little bit, as they probably will as we head into some of this weather this season. So it's feeling just okay. Like I said, it doesn't have that real strong push to it yet, but has a few things that we do like about it. I don't know that it has that risk right now that we're going to break sharply. I think it's just more of the attitude that it can, keep gaining and try to see if we can get that summer June month back above 100, but it's running out of time here.
Yeah, it rejected it here this week again. I'm going to say this. I was disappointed with the close yesterday, considering we had strong weekly exports and China was back in buying, even though you tell me that's old news.
Yeah, unfortunately, that's 2-week-old news. Wish we kind of would know that ahead of time, but that is a good sign. I mean, that we've had enough tariff news talk around, and we know what's going on with China. So anytime that they're in buying some of that's a good sign. I think we need that little shot in the arm with all of the outside news that's happening.
Grains have had a pretty good up week. We're seeing a little bit of pullback this morning. Is just some profit taking going into a 3-day weekend?
That would be probably the easy answer. Yeah, 3-day weekend coming up, and we have to kind of take that step back and look. There's a lot going on. We're sitting here in spring. This is the time when you can put in some highs, and we don't have a full swing weather trade yet. I feel like everybody's on the attitude that, hey, it's going to get hot and dry this summer. So, and it's, yeah, and that's where everybody's really leaning. That's probably keeping a floor under the market here. But if we look at it, snapshot today, got it planted in quick order, in my opinion, in some very good conditions, and got some nice rains after it. So we're starting off, in excellent condition here. It's going to be, blink your eyes, these rows are going to be closed. We got some moisture in the ground. It's going to be, take a little bit more to dry it out. We've got great genetics. So I think maybe that just kind of hangs over the market just a little bit. We don't have a poor crop that says we need to just pop this through the top side. We need to get going. We're not there yet. Maybe it's the middle of June when you start to look at that. I mean, that's when you really start to digest what the summer weather looks like, how much rain we're going to get. So it's too early to rally on that weather news. So easy for it just to take a little break, a little bit of setback. Yep, you throw tariff talk back into it, no matter what country it is with. We're just kind of sick of hearing it. So it's pretty easy to say, hey, we've just rallied 20 cents. Maybe it's time to take a little breather here ahead of the 3-day weekend and kind of redigest what we need to do on Tuesday.
Right. And we did run up into some chart resistance here again, didn't we? Some retracement levels.
Yeah, we hit some halfway retracement numbers on the corn. Looked like it was going to try to get through right in line with all of those moving averages. It felt like it was there and just kind of ran out of gas. Had its 3 sharp up days and then took a little breather. Beans, they got up near the monthly highs, basically had maybe a better chart than what the corn did as far as looking like it got through some of that resistance, but we always run into the next resistance spot. It just doesn't have the oomph to get through it yet.
All right. Thanks so much. You have a good weekend. That is Scott Varilek with Kooima, Varilek, and Markets Now.